Financial Solutions is brought to you by First Hawaiian Bank.
All right, we are back now. As you know, every other Monday, our friends at First Hawaiian Bank stop by here at the Harmon Station and give us some helpful information with financial solutions. Now tonight, we discuss the topic of refinancing, and joining me from First Hawaiian Bank is that organization's one of their vice presidents and the Tamuning Branch manager, Mr. Peter Valdez. Welcome back, Pete.
Hey, how you doing, Jason?
All right, good to see you. Half a day. Okay, so refinancing is very important. Some people don't know exactly what it is. So, before we get into the particulars and everything like that, what should people know about what refinancing is and why it's important?
It's important in today's environment because a lot of folks can take advantage of the low interest rate environment. And refinancing basically is taking a look at two things, the current rate you're paying and how you can reduce that rate, and restructuring your payments to reduce that payment. Today, interest rates are generally between 3.25% to 6% to give you a range. And by refinancing your mortgage, you could save a substantial amount of money over the life of the loan and reduce your monthly payments.
Mm-hmm. Now, refinancing isn't something that you do if you're a member of the super rich, or if you found yourself on unfortunate circumstances and everything. It's actually a smart thing to do to take advantage of the economy.
Yes, if it makes sense. Mm-hmm. And a couple of things to consider when you refinance your loan. You got to look at the loan and see whether or not it's about ready to get paid off, and whether you have other bills that yield higher interest rates, for example, personal loans and credit cards, and whether or not you want to take out extra cash. Mm-hmm. Now, if you don't fall into that category, then refinancing doesn't make sense. Mm-hmm. But in the contrary, if you've got a number of high-yielding interest rate loans, again, credit cards, personal loans, and a high balance on your first mortgage, you can consolidate everything into one loan and refinance it and reduce your payments, and again, saving money over the life of the mortgage. Mm-hmm. Other things to consider when you refinance is the interest rate you're paying today. As a general rule of thumb, if you're saving at least 2% off your interest rate, you may want to consider going to the bank and talking to your banker about refinancing your mortgage.
Okay, so that's a good question, because what if I've already got a mortgage that's like kind of low, or like I'm not someone who really likes messing around with risk that much and everything like that. So how can I know if refinancing makes sense?
Equity line of credits is a great way to borrow. Mm-hmm. And it's not refinancing, but you could use the line of credit whenever you need the funds, rather than going out and borrowing on a piecemeal basis. Mm-hmm. and find yourself getting into trouble later on by overextending yourself. But with the equity line of credit, you would use your house and the equity that you built on your home as a facility to borrow in the future. Mm-hmm. And First Hawaiian Bank has an Equity First Line Plus program, which allows borrowers to fix the rates on the borrowed portions of their line of credit.
Okay, now real quick before we go to commercial break, if I come to you and I say I'm interested in refinancing some or all of my loans and everything like that, here's my portfolio, or at least what I know about it, what are you as a lender and a financial expert, what are you going to look at, and what are you
First thing we look at is your budget. Determine whether or not you could afford the current loan that you have, and find ways to see if we could reduce your payment and improve your financial well-being.
Okay. Yeah. All right, well, Pete, thanks so much for the information.
Hey,
all right.